And the BRICS are pushing back. And Trump doesn't like that. And that's why he's standing up for the Federal Reserve here in this case, saying you better stay in the dollar. And they're laughing. They're laughing. In my opinion, this is just going to hasten or speed up the free fall of the dollar.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for November 25th through December 2nd, 2024, while supplies last. First, we feature backdated 1-ounce silver Austrian Philharmonics at just $3.09 over spot per ounce. We also feature the limited edition 2024 1-ounce gold UK Lion and Eagle coin at just $99 over spot per ounce. And finally, 1/10-ounce gold Britannia are just $29.99 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're always delighted to have this widely followed returning guest. Gregory Mannarino is the founder of TradersChoice.net. He's a student of all markets. He's a trading coach, and he joins us this Monday, December 2nd, 2024. Greg, thanks for coming back on Liberty and Finance.
Man, I love being here. I love you, and I love everyone that follows your work, too.
Well, the feeling is mutual on our side of the microphone because they are always asking me how long till I can get you back. And you've been very gracious visiting us more often than recent around the election and all the changes that are coming. You just posted a video blog, as you do every day. But this one you talked about something that's near and dear to the hearts of our audience, and that is a couple of major factors. One is with the Trump election, the direction that he is stating to take the U.S. dollar and the relationship of the Federal Reserve to the White House. Secondly, the rest of the world's response to that you've been warning us about for some time. And then thirdly, we'll get to your outlook for real things, commodities in particular, and gold and silver, not the least of those, in relationship to the risk-on environment we currently are in. So if we could just wind back to the beginning and cap your highest points that you were making about the direction that you anticipate this administration announcing that they're wanting to take the dollar, the Fed, and our relationship with the monetary world.
Well, it seems pretty obvious to me. We got this threat. I mean, we'll just focus on the BRICS nations real quick. So Trump made a direct threat to the BRICS nations saying, you better stay in the dollar. Don't you dream of circumventing the dollar or replacing the dollar, or else you're going to be faced with 100% tariffs. Look, here's my take on this right off the bat. Threats never, ever come from a position of strength. When someone, a person or a nation threatens another nation or a person here, it's always from a position of a weakness. If someone is strong or a nation is strong, there's never a reason to threat at all. It's just kind of an understood thing. And unfortunately, what Trump has done here is reveal how weak we are. And the fact that he is in full support of the dollar, which means he's in full support of the Federal Reserve. I mean, this should not be a surprise to anyone. I know a lot of people have been duped, lied to, deceived, distracted, saying that Trump had somehow, we heard the same nonsense last time, was going to get rid of the Federal Reserve, and all that did happen was the Fed was vaulted to the pinnacle of power. The Federal Reserve clearly has an ally in the White House behind the resolute desk, something I warned would happen. I said before the selection, no matter who was selected, I said we were going to know who the real traitor was. And that would be a person who would be in the pocket of the Federal Reserve. And clearly that is what we have here, unfortunately. And the world is laughing. We cannot force the world to participate in the Federal Reserve scheme. All it does, obviously, is by threatening the world, hey, you better use the dollar here, is obviously supporting the central bank system, the Federal Reserve in this case here. And as far as I'm concerned, and I would believe most of the people that follow your work would be in the same boat, is we got to get rid of this institution. But that's not what's going on here. We're not being made we are being made the crypto capital of the world, not the constitutional money capital of the world, which, look, man, who's surprised here? Really, who is surprised at what we're seeing? I don't think anyone. We are being bridged into a new system. It's pretty obvious. This new the crypto capital thing is only a bridge system into the new system, which is coming, unfortunately. And the Federal Reserve is going to control that as well. And so that's where we're going. Unfortunately, I mean, look, man, but this is opportunity as well. People need to look, this is no surprise to anyone that follows our work. We're being systematically wiped out. We're being destroyed in support of the 1% and 2%ers, the central bank system here. And that's who we got, unfortunately. People think they got something different, but they didn't. They were just a lie and deception. And as this, what else would you expect in this environment? But clearly that's what's going on. And there's opportunity here across the board, more so, I think, than we've ever seen. You know, you can look at everything from two perspectives. It's bad, but there's out of bad things can come something good. And I think that's really what we got to focus on here. Look, man, we're all in the same boat. We realize here that the central banking system, and in this case, the Fed, is going to be made much stronger moving forward. We got to take the opposite side of that trade here, man. We got to understand, first of all, we need to be in this market. I know a lot of people are still calling for market crashes. It's not going to happen. We're going to see artificially suppressed rates for as far as the eye can see, and then some. We're going to see more currency devaluation on an epic scale globally, not just here in the United States, as central banks continue to fulfill their goal to issue in a new system. And I really believe that's why Trump was selected to bridge the system into the new tokenized system, the crypto capital of the world, not the constitutional money capital of the world. Forcing the world, it's just a joke. Imagine if you are the leader of a nation, you're told you better use Federal Reserve notes or else. I mean, you got to be kidding me, man. If that doesn't reveal a weak hand. Look, I was a poker player for many years. I played semi-professional for years. And I know a weak hand when I see one. And threats are always come from a position of weakness. It's not a position of strength.
You've pointed out for some time that the policy of weaponizing the dollar and the SWIFT system, et cetera, backfired on us. You talked about all through the previous Trump administration about how tariffs were supposedly going to be punishing China, et cetera, but they ended up punishing the consumers, et cetera. You've mentioned today in your blog about Putin's direct response to Trump's most recent, financial saber rattling. Can you talk to us about that dichotomy of Trump's statements and actions versus the BRICS in particular's response?
Sure. I mean, it's quite obvious. First of all, as I said, this is from a position of weakness, and that's been revealed to the world, unfortunately. There is no way that what Putin said, or the Kremlin said, was Trump's threat will more than likely cause the world to back further away from the dollar faster. And I really believe that's good. Again, this is not negotiation. A lot of people, they go, this is Trump negotiating. You don't negotiate from a point of weakness. If you're going to reveal how weak you are, no one's going to want to negotiate with you here. The world doesn't want anything to do with the dollar anymore. They don't want anything to do with our products anymore. Unfortunately, the United States we're in a losing spot here. And, I don't think this is a surprise to anyone. And what does it really come down to? It comes down to, well, you could look at this as a mismanagement of the financial system or something that's deliberate. In my case, in my situation, I think the people that follow our work, they realize that nothing is happening by accident. Everything is deliberate here. And the BRICS nations that we heard from, he also threatened Mexico. The Mexican president's like, this ain't going to fix anything. You got Canada saying they're going to retaliate. You got China saying with tariffs. You got China saying the same thing here. I mean, come on, man. This is not using tariffs as a negotiation tool from a perspective of weakness. You don't threaten. You don't threaten anyone ever, or a nation, from a perspective, again, of pretending to be a feigning power. It's obviously the polar opposite. And unfortunately, the world's going to see it that way. And that means the dollar and the United States is going to fall faster from whatever position it may have now in the world, unfortunately, bro. And it's just too obvious. But this means, again, look, most people have no clue as to what's going on. A lot of people have been deceived and duped into believing that they have some kind of a savior deity brought to them in the form of a Donald Trump, which is obviously, we know that this always ends miserably when people put their faith in the wrong place. But that's what's going on here, unfortunately. A lot of people are going to be disappointed, and we're going to suffer. We're going to be I've been saying this, forced suffering here in the United States and around the world as central banks fulfill their goal. Imagine, really, the situation we have. It's almost surreal when you have a president here trying to force the world into using central bank issued notes, in this case, the Federal Reserve. What does this do? Does it weaken the Federal Reserve or does it make them stronger? Obviously, it makes them stronger. And that's where we're going to, I'm just going to say this right now, man. Look, there's no way that the Federal Reserve is going to be much stronger at the end of Trump's tenure this time, just as he was the last time. You remember all the nonsense, all the rhetoric? He's going to end the Fed. It's going to go away. What he did under his last tenure is vault the Fed to the pinnacle of power. And we're going to see more of that moving forward. And we just got an inkling of it now as he's trying to force the world to stay in the dollar and use the dollar. It's just going to accelerate the process of getting us out of it, unfortunately. Okay.
You use the term surrealism. Another thing that you mentioned in your video blog today was about the dichotomy between the physical economy, and you've pointed this out for about a decade now, the dichotomy between the physical economy versus the markets. Can you zero in on that, the latest evidence we have of what's really going on the ground and what's likely to continue to go on versus what's happening in the markets?
Well, it's too simple. There are only two, you know this, and I think anyone that understands economics and finance knows that there are really only two fundamental truths in economics and finance. And that comes down to have a strong economy, you have to have a strong currency. To have a strong currency, you have to have a corresponding rate of interest high enough to support the purchasing power of the currency. So what we have here, again, is collectively central banks in a race to the bottom to destroy the currency by lowering rates. Trump is a proponent of negative rates. This is what he said during his last tenure, calling the Fed boneheads for not going negative. I mean, what this is an economic wrecking ball. When you have any central bank looking to artificially suppress rates, having a politician calling for negative rates or lower rates here, all it does is, it's a mechanism to destroy the economy and push the stock market higher. The gap between the economy and the markets has never been as great as it is right now. And we're going to see this go on more so until it ends. And the moment of ending here, we do not have to guess. Again, we've taken a lot of guesswork out of here by just watching the debt market, which is all I look at. I've been telling people this for 10 years. I don't care what the stock market does. I know what it's going to do based on what's happening in the debt market. If we see rates artificially suppressed as they are now, and we're supposed to be in this strong economic situation, then why do we need lower rates? I mean, we need higher rates. To fix the situation, we need the polar opposite of what we're being sold, that we need artificially suppressed rates and therefore a weaker currency. Go back again, just 20, 30 years ago when we had a much stronger currency, much higher rates. One income could support a family here, a nice car, and family dressed in nice clothes. Today, people can't get by. We just found out today, home affordability just hit a new record low. This is the mechanism, but people have no idea of what's happening to them. And this is a crime, in my view. We need real leadership. We need someone to say, listen, guys and girls, we don't need this. What central banks are doing, and now we have a president right in bed with the Fed who wants lower rates here. Wait till people see what's going to happen here. Our economy is going to free fall faster. Trump is going to come out and say, you're not cutting rates fast enough. Mark my words. I want people to save this video because they're going to hear it. They're going to hear that come out of his mouth. The Fed's not cutting rate fast enough. That's why the economy is falling, which it's all leading to destruction. And what people are going to believe, some of the people that just have no clue is, oh, Trump is right. We need lower rates. But what you won't hear out of his mouth is lower rates means loss of purchasing power. And we're also going to see a couple of other things. We're going to see debts and deficits balloon more so than we have now. And that's going to be made worse for people for suffering with regard to the cost of things. Cost of things, if they think inflation is bad now, wait till they see where this is going here with Trump's tariffs, which are coming, with currency devaluation from the Federal Reserve. They're going to really not know what to do with themselves. And you're going to hear this. Every imaginable excuse why Trump's policies aren't working. They can't see it for themselves. The dumbing down of society, bro, is complete. And there are very few people like you and me and the people that follow our work that are able to see through the garbage. But again, this is opportunity, just like we started off with.
Along the way, you mentioned that commodities have been out of favor. They've been under a lot of pressure. That's been one of the things that you've reminded us has real value for a long time. And you say, become your own central bank, bet against the debt, that sort of thing, and own real things. And yet, you're saying that you believe in this risk-on environment. The market is not done, and the crypto the melt-up is not done. So how do you balance those two things as someone who wants to take responsible care of your family and your in your next generation's finances in keeping your feet on the ground, owning real things, looking for opportunity there, as you just described, versus not ignoring the fact that we're still in this full-blown risk-on, officially sponsored environment?
It's unfortunate. The distortions in price action across the spectrum of asset classes is going, and I've been warning and telling people this for many, many years. It's going to get even worse moving forward here. The mechanism of, again, artificially suppressed rates, currency devaluation, all it does is open up a doorway for cash to make its way into risk assets. In this case, we're talking about the stock market here. And of course, this vaulting higher of cryptocurrencies as the United States has transitioned into a blockchain system, obviously, not a constitutional money system, is pushing cash into the crypto space. So understanding the environment is risk on. And again, look, I am not saying that this market is not. This market is so detached from any kind of reality. Again, the multiples that the market is trading on, we've never seen before. And that doesn't mean it's going to stop. I think the mechanism here of artificially suppressed rates of currency devaluation is going to push more cash into risk assets or the stock market and, of course, into cryptocurrencies as well. And that means that cash is coming out of things or is not going into as much into, let's say, commodities, because these are risk-off assets. So, and I even just this morning, I got questions about this. Hey, Greg, what's happening to commodities? Why are gold and silver underperforming? It's too simple to understand. Cash does move through these markets in predictable patterns. The environment being risk on here, the corporate agenda, the cutting of corporate taxes here, the pushing up of wealth to the 1% and 2%, this is going to accelerate moving forward over the next few years here. And that wealth is stolen. It's grand theft from the people down here getting shoved right up to the 1% and 2%ers. They're the ones that own most of the market. They're the ones that own most of the crypto space. And again, this is opportunity in understanding that commodities, because they are real things. The higher the market goes, the stock market goes, the more on sale commodities are going to be relative to other things. So again, global, if anyone is having a fantasy that they're all of a sudden going to see global debt start to contract in any way, or currency devaluation on the back of that, is completely duped into something that just isn't true. The mechanism is going to be much greater moving forward until we're being pushed off of a financial and economic cliff. And unfortunately, this is going to end up very badly, very, very badly for most people. And but people can get themselves in the right spot of this. Yes, I am still long this market, buying the market. Yes, I still believe the stock market is going much higher, despite the fact that it has no bearing on reality. But what would you expect to see in this kind of an environment? We don't even get drops in this market or corrections or anything else anymore. Just up, 52 record highs for the S&P 500. So far this year, it's basically one per week, more so than that. And I believe we're probably going to get more records before this month too. And it just means, again, that, look, we got to play the game. The game is too simple right now, and that's a problem. And I've been telling people this. It's too easy right now to understand where cash is being pushed into this market. No one that follows my work understands that we've been dead on with regard to the market, with regard to the crypto space, and even with regard to commodities. Look, we hold commodities not because we're expecting to go up tomorrow, as a hedge against a warped system. The system is warped. I don't know another way to put it. It's just not connected to anything real, and commodities are real. It's all in fantasy land here. It's not on the elemental chart. But this is going to turn. Eventually, a debt market meltdown is going to occur at a time of their choosing, not at a time of ours. And by watching action in the debt market, looking at the benchmark, the U.S. 10-year yield, we can gain a lot of information here. I intend to keep myself long the stock market, buying cryptocurrencies, adding to my positions here with regard to commodities, which I haven't in a long time. But I built on my position in commodities it was the first thing I ever did, was to build up my positions in commodities here. So I have not added to those positions in a very, very long time. I'm kind of riding. I'm not saying I won't add moving forward, but I build my positions like very methodically. For example, build up my positions here as I was in the market, of course, at the same time, but pulling profits from the market and putting that into building up a position in commodities. Now I'm kind of just riding the market. I would make a profit in the market. I'd pull it out. I would buy silver, gold, mostly silver, platinum, palladium as well. Now, I don't do that anymore. I built a position in JEPI, which is the ticker symbol. I built a pretty large position. Now I'm building up JEPQ. So I like to build this, move on to this, move on to that. So with regard to commodities, I think people right now is a golden opportunity. No pun intended, but it's really the truth. So just realize what's going on. And then instead of, being fearful, there's no fear here. You can't be paralyzed. You have to take action. And it's too simple, in my opinion, right now, for people to make the system work for them and not against them.
One of the recurring guests on our channel, who's a legendary investor, Rick Rule, former asset manager, former CEO of Sprott Asset Management, talks about the joy that he feels positioning himself where he knows he's in the right place, and it's a very unpopular place to be. When all the financial press and all the attention and all the accolades is going in a different direction, but he sees value where it's not being recognized, then he loves to build a position there where he has no competition, and then be patient. And he says it's that fortitude of A, knowing that you're right and you're in the right place, and B, the patience of being willing to be quote unquote wrong for a while until everybody else suddenly realizes that's the place to be. What are the factors that you see in the future that would signify to you a shift in this risk-on environment, whether it's international geopolitically, whether it's something in the financial, like you often watch the debt market, et cetera? What are you watching for to be your early warning signs that it's time to get out of Dodge in terms of either the market or any of these other risk-on assets that you're talking about right now?
It's always the debt market. It's the only thing I look at. The debt market dictates where I'm going to put my cash to work in this market. It's all that I'm looking at. It's all that the world, every investor is looking at right now, because it's the key. It's the one singular key to everything that's happening here. When you have this mechanism, again, of artificially suppressed rates, currency devaluation, you know where cash is going to move in the market. It's too simple. It's too easy. The only thing I look for here, and it's going to happen, is going to be an uncontrolled sell-off in the debt market. We got quite a sell-off in the debt market as of late. We had the 10-year yield almost par with the federal funds rate, which was something I was looking for. I kept talking about it. I kept saying that if we get par, 10-year yield, federal funds rate, the market's not going to like it. We almost got there. Then a miracle happened. All of a sudden, it starts dropping, man. You can't make that up. You can't make it up. So this just happened. We get almost par, almost, and then all of a sudden, down. No, obviously there's intervention here. We know who's intervening here. It's quite obvious. No investor is going to be buying debt or in this environment where the market keeps doing nothing but go higher. Looking at even the crypto space here as well. So people, it's just too simple to look at the dynamics in play and let the dynamics, in this case, the number one is the debt market here. Henceforth, why I created the MMRI, I created it for myself, the Mannarino Market Risk Indicator. I said, how can I best gauge what's happening in the debt market here? And then when I said, wow, this is a pretty cool tool, what did I do with it? I offered it for free. I want people, knowledge is power. I want everybody to win, everybody. So why not release this to the public? There's no signups. It's right on my website, traderschoice.net, top of the second page. I want people to utilize that tool because in my opinion, again, I don't get anything out of people looking at it. It's free. I want people to utilize every weapon in their disposal to turn the tables on those that are looking to destroy us. And any person trying to keep us in the dollar is obviously working for the Federal Reserve. And I'm referring specifically to Donald Trump here in this case here. Is obviously our enemy. We don't need to be the crypto capital of the world. We really need it to be. Imagine, for example, if Trump would have said, let's become the constitutional money capital. Do you know what would be happening to the price action of gold and silver right now? They'd be taking off. But what would that do? That would have put a lot of pressure on the stock market. And that's not what Trump is all about. This administration that we have, and I want people to get their head around this, okay? I'm not bad-mouthing anyone. I just want people to understand the dynamics that are in play. This is the most stock market positive administration that has ever been put together, I think, in the history of the United States. And that means, again, just like last time, rah, 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 look at that stock market. It was a big, fat, ugly bubble before he took office. Remember that? Then it wasn't a bubble anymore. Then he wanted it to go up and up and up and up. And he actually said, we're all rich, not referring to you and me. He was referring to the 1% and 2% that own the market. And it's going to be the same dynamic in play now until it doesn't. But again, man, look, I don't want people to come away from this worried or scared. People need to come away from this understanding that this is an awesome opportunity here to add to your commodity holdings here, to stay long the market if you are so inclined, to get into the crypto space. We haven't seen anything yet. I mean, I've been hearing about crypto going to zero since I don't even know when. It's not going to zero here, especially now that the United States is being vaulted to be the crypto capital of the world. We're going to lead the way, obviously, and this is what Trump has been selected to do, reaching us into the new system here, allowing this blockchain system to kind of become a worldwide phenomenon. And the BRICS are pushing back. And Trump doesn't like that. And that's why he's standing up for the Federal Reserve here in this case, saying you better stay in the dollar. And they're laughing. They're laughing. In my opinion, this is just going to hasten or speed up the free fall of the dollar.
That's what I was going to get to is what do you anticipate being the real consequence to, for example, you mentioned watching the debt market and an uncontrolled sell-off in the bonds. Well, we had indications throughout the middle of the year here that Russia, China, and India and others were selling bonds to buy gold and silver, for example. That the BRICS response to, if Donald Trump follows through on his rhetoric of 100% tariffs on various countries, et cetera, what do you anticipate being the response to that internationally and the results, the real consequences of that to our debt market, for one?
Well, the Fed here, who's buying all the debt? It's the central banks. They're the ones that are the number one buyers of debt. They're going to keep buying it until a moment. That's why, again, I keep saying, when this comes down, what we're going to end up seeing is an uncontrolled sell-off. And I mean, not just a sell-off like we had. We're going to see 20, 30, 40. I wouldn't be surprised to see 50 basis point spikes in the 10-year yield on a daily basis when the moment actually comes here. But again, once the Fed in this case stops manipulating the debt market, we're obviously in full-blown yield curve control. The Fed has been involved in QE since June of this year. Right under everyone's nose. It wasn't announced, but it's what happened. They also got involved here with yield curve control, and the market's loving it. And that's why you're seeing what we're seeing here right now. It's a message. The Fed sends subtle messages to the market. We got your back. We got your back. Stay long the market. And that's what they're doing here. And people who can decipher the code, if you want to call it that, have obviously done very, very well. And that mechanism is going to stay in place until it isn't. And I don't want to pinpoint it when it's going to happen. I think the world, again, we're in a really bad spot here economically. The world economy is disaster area. And you got central banks inflating the global debt. It's not going to stop. Currency devaluation. It's a vicious cycle. The more they devalue the currency, the more currency they need, because now it takes more currency to buy anything. So it fulfills their agenda to become the lenders and buyers of last resort. This is what the Fed wants. What every central bank wants to do is to have absolute control over the debt market, which is the key, yet again. And it seems like they're pretty much there already. So when is it going to end? I have no idea, bro, but I'm going to take advantage of everything I possibly can until that time. But we're hedged. I think people that follow our work realize, at least, people that follow my work, I get a lot of pushback. Oh, Greg, you're wrong telling people to stay long the stock market. Greg, you're wrong about telling people to buy cryptocurrency. I've been hearing this for 10 years, a very, very long time. And, I pretty much think I got it right. But there's going to be a moment to get out. And the moment to get out is going to be dictated to me when I see, let's say, the MMRI spike in an uncontrolled fashion. Well, this is going to be off the charts at one point, literally, deep into the red zone. Red zone is at MMRI 300. And I wouldn't be surprised to see MMRI 500 when we get a meltdown in the debt market. And that's going to, again, but what's really going to happen, it's not about the stock market. People got to stop looking at this stuff. We're in a liquidity crisis right now. And the only way to keep the charade going is to keep pumping more debt into the system. That's why Trump wants people to stay in the dollar. The dollar is a unit of debt. It's not a unit of wealth. Okay, world, accept more of the Federal Reserve's debt coupons, because that's all they are, which of course makes the Fed stronger, not weaker. And the world is laughing. The world doesn't want anything to do with it anymore. That's why the BRICS alliance was made, because of, or is now being built on the back of this world dollar de-dollarization. I mean, this has been going on for quite a long time. It's too easy, man. It's too easy to see what's happening. But I don't want people, like I said, we don't have to guess. We just keep our eyes on certain dynamics in the market, and we're going to know when to get out of here. I promised all the people that follow my work that I will keep them ahead of the curve to the best of my ability. And I think that I have outperformed that promise to people, and I will still keep that, because this system has been weaponized against all of us, and we're losing. We are losing. But people that get it, we can't be beaten. It's too simple. We have their playbook. You and me and the people that follow our work, bro, they have the playbook. We know what's going on here, and it makes it very easy for us to understand what we need to do about it.
For people who want to follow your writings on an ongoing basis, and you are prolific, where shall they get connected?
Just go to my website, traderschoice.net. Just Google me, go to my blog. I'm an easy guy to find.
We've been speaking with Gregory Mannarino, the founder of traderschoice.net, here on Liberty and Finance. Greg, as always, just on behalf of all of our viewers, thank you for joining us.
Thanks for having me.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for November 25th through December 2nd, 2024, while supplies last. First, we feature backdated 1-ounce silver Austrian Philharmonics at just $3.09 over spot per ounce. We also feature the limited edition 2024 1-ounce gold UK Lion and Eagle coin at just $99 over spot per ounce. And finally, 1/10 ounce gold Britannia are just $29.99 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.